You were probably told that taxes are just something that happens to you. A chunk of money vanishes from your paycheck. A bill arrives from the government. You have no say in the matter. That is the biggest, most expensive lie you were ever taught about your financial life. People think of taxes as a punishment for earning money, a penalty they must endure without question or control. This belief keeps people financially stuck, living paycheck to paycheck and wondering why they can never seem to get ahead. It's a passive approach to one of the most powerful forces shaping your wealth, your dreams, and your future security. The reality, the tax system is not just a one-way street where the government takes your hard-earned cash. It's a complex set of rules, like a game, and once you understand the rules, you can play intelligently. The tax code is filled with incentives, rewards, pathways designed to encourage certain behaviors, saving for retirement, investing in your education, starting a small business. Most people view their annual tax payment as a fixed, non-negotiable bill, much like their rent or a utility payment. They see the final number, sigh with resignation, and pay it without realizing the profound influence they had in creating that number. This is the wrong mindset. Your tax liability is not a static bill. It is the dynamic result of a year's worth of financial choices. Every decision you made, contributing to a retirement plan, paying for childcare, actively shaped the amount you owe. The tax code is essentially a list of financial choices the government wants to reward you for making. Think of it this way. The government wants people to save for their own retirement so they won't be a burden on the state later in life. To encourage this, they offer powerful tax deductions for contributions to accounts like a 401k or a traditional IRA. Let's say you earn $60,000 a year. Contribute $5,000 to your 401k and, for tax purposes, your income becomes $55,000. Your tax bill is calculated on the lower amount. Your smart action step: log in and increase your savings rate by 1% today. That single choice is you actively choosing to pay less in taxes. We often dismiss small financial details, thinking they won't make a meaningful difference. A tiny deduction here, a few dollars there. It can feel not worth tracking. This is a costly mistake. Small, consistent actions compound into significant sums. Meticulous tracking can mean hundreds or thousands more over a decade. Pens and notebooks, a professional journal subscription, using your car to visit a client. $5 a week is $260 a year. Deducting it could save $50 or more. Freelance design, fonts, software, books. Small, but they add up. 500 of deductions can cut your tax by $1 to $150. Over 10 years, that's over $1,000. Start a simple record-keeping habit. Envelope or shoebox works. Create an email or desktop folder for digital receipts. For the next week, save anything that might be work-related. Don't overthink. Just collect evidence. Tracking small change leads to big money. Your action: label one folder 2025 tax deductions and begin today. Most people only think about taxes during a frantic scramble in the spring, right before the filing deadline. That's like training for a marathon the day before the race. Effective tax planning is about timing. The calendar is a powerful tool. When you earn income, sell investments, or pay deductible expenses affects what you owe. Expect higher income next year? Accelerate deductions into this year. Moving deductions can offset more tax when income spikes. Hold a stock over 1 year, and your profit is usually taxed at lower long-term rates. Sell at 11 months, and you pay ordinary rates. Waiting a few weeks can save a lot. Action: mark mid-June and early November to review your tax picture. In 30 minutes, check income, plan sales, bonuses, tuition. Time decisions before year-end. Turn your calendar into a wealth tool, not last-minute panic. Timing income, deductions, and gains is Tax Strategy 101. Your time choices shape your tax bill. A dollar is not taxed the same across the board. The system is nuanced about where money comes from, and taxes each type differently. Your job income is taxed differently than your investment profits. Rental income has different rules than inheritances. Salary and wages are ordinary income, typically higher rates. Qualified dividends and long-term gains often get lower, preferential rates. Some income, like certain insurance proceeds or gifts, may be tax-free. Knowing distinctions helps you favor better taxed income streams. Suppose two investments both yield $1,000. Interest is ordinary income. At say 22%, you owe $220. Long-term gain at 15%, you owe $150. Same profit, different source, different tax bill. Action. List your income sources: job, side hustle, interest, dividends. First, simply recognize they're not equal in the eyes of the IRS. That awareness is the foundation of tax-efficient strategy. Many people dread keeping records. It feels like clutter. They toss receipts, ignore statements, and guess at tax time. An expensive mistake. Good records aren't clutter. They're proof. Proof lets you claim every deduction and credit you're entitled to. The burden of proof is on you. If audited, the IRS won't take your word for it. Without receipts, statements, or logs, deductions get disallowed, with back taxes, interest, and penalties. Proper records are your shield and your peace of mind. Drive 1,000 business miles. At about 69 cents per mile in 2025, that's a $690 deduction. That can save over $150 in tax, but only with a contemporaneous log. Dates, destinations, purpose. No log? You risk losing it entirely. Action. Buy one folder with pockets or an accordion file. Label it and place it where you'll use it daily. For the rest of the year, drop every potentially tax-related paper in there. Don't sort, just collect. Chaos to calm. DIY is great, especially if your finances are simple. For many, basic software is enough, but complexity turns DIY into penny-wise, pound-foolish. A good tax pro is an investment. They navigate rules, uncover savings, and advise proactively. Starting a freelance business? Go it alone and you may miss major deductions. One meeting can reveal 5 big wins. Save $2,000. A $400 fee becomes a great investment. Action. Identify your moment of complexity. If you've had or plan a major event, marriage, home, child, business, inheritance, research one CPA or EA nearby. Ask a savvy friend or check professional directories. You don't have to book yet, just have the name ready when you need it. Preparation turns advice into ROI when it matters most. Old tax rules don't always apply. Congress changes credits, deductions, thresholds, and contribution limits regularly. Not keeping up hurts. You miss savings or claim defunct deductions. New credits, like for home efficiency, can be worth hundreds, but only if you know to claim them. 2017 ended many miscellaneous itemized deductions, but raised the standard deduction significantly. Using outdated rules can trigger corrections or audits. Action. Once a year, check irs.gov. What's new for changes? Set a calendar reminder for early January. 20 minutes keeps you far ahead. New knowledge unlocks benefits. Old knowledge causes mistakes. Make updates a habit to capture credits and avoid penalties. Taxes aren't something you must passively endure. The truth is choices, details, timing, knowledge. Small changes compound into big savings. Not all income is taxed equally. Good records are your best defense. Professional help is an investment. Staying current is crucial. Contribute to retirement. Track business expenses. Time investments wisely. Use the incentives as designed. Take control of your financial destiny. Build small habits. They compound into thousands saved. More security, more confidence. You have the knowledge, now act. Choose one. Open a receipts envelope. Increase your 401k by 1% or set a mid-year review. Stop letting money happen to you. Tell it where to go. Take that step now. Enjoyed this? Like, subscribe, and share. Comment tax for more.